Howdy folks, I hope you're enjoying the A1 Trading Show, and I just want to let you know that we are currently doing a flash sale on the EDGEFINDER. This week, you can currently get 25% off if you send a direct message to our support staff standing by who helps keep the show running smoothly. If you use the link that's being dropped in the chat or the first link down below in the description, you'll be connected to a real person on my staff who can set you up with a 25% off discount on the EDGEFINDER, and if you'd like to get access to the Discord, we'll throw that in too for a nice 25% off the price. If you have not already taken advantage of this sale, you can click the first link in the description or chat with us by using the chat link below. Keep on enjoying the show, and now let's get back to it.
Hey traders, it's James here from the A1 content team, and as we start today's stream, I want to share with you some exciting news from our friends over at FX2 Funding. FX2 has just launched their two-stage evaluation. The two-stage differs significantly from their one-stage, offering many benefits to traders. First of all, the profit targets are much more manageable, with 8% in the first stage and 5% in the second stage. Next, you'll get a 10% fixed overall drawdown that does not trail your account balance. You get all these perks on top of FX2's existing world-class customer service, high-performance technology, and a choice between two amazing trading platforms, CTrader and DXTrade. There's a reason FX2 Funding boasts a Trustpilot rating of 4.7 in this time of industry turmoil. They are a serious company run by seasoned business professionals and always take conservative steps to protect their traders. For traders looking to get funded, you can use promo code A1Trading15 to save 15% on all funded accounts. That's A1Trading15. The promo code can be found in the link in the description below and in the live stream chat right now. Now, on to the show.
All right. Good morning, everybody. I am back and happy to be here. I'm gonna turn off my unmute my screen here, and we're back. Get the intro music playing and everything. I'm really glad to be back. I was away for a wedding in Ireland, and this was actually my third time being to Ireland. It was beautiful. It was so fun, but I am glad to be back. And shout out to all my friends hanging out here with me, and perhaps a bigger shout out to all of the wonderful different guests that helped to host the show while I was gone. Of course, there's always a rotation of guests and hosts that make up what this is. This is a community live stream. It's no longer just the Trader Nick show. It's really meant to be kind of a community trading hub. And I just want to say thank you to everybody who, helped to keep it running here. You know, James and Chandler did a remarkable job keeping the show alive. Just watching these intros, I haven't seen all of them yet. So, wow, they look great. James and Chandler, again, round of applause to them and to all of our guests. I see James is in the chat. What's up, James? Great tip. Says don't gamble on the news today. Remember, react, not predict. Absolutely, so true. A big day to come back because NFP is, it's in about 10 minutes. And guys, this market has been crazy to say the least. It's like I stepped out of the office and everything went haywire. We've got the dollar index trending lower. We've got stocks dropping when I first left and then rebounding to all-time highs. Gold all over the place here. I mean, it looked like, we were seeing a breakout there and then a big sell-off here overnight. And again, the S&P 500 is just at the all-time highs. And what's crazy about this is that it looked like it had aggressive selling and then just turned around like nothing ever happened. And I've been out of the loop of it, guys. I've been when I'm in the thick of it, I'm staring at this stuff for hours and hours a day, and I'm reading into everything that's happening fundamentally and economic data and central bank drama and all that good stuff. I'm a little bit out of it, to be completely transparent with you guys, but I have been able to just keep in touch with the EDGEFINDER, and the EDGEFINDER has kept me relatively up to speed. What I can see here is that there's been a slew of economic data that's come out cool, which is continuing to keep gold as a bullish setup for me. I'm going to be watching gold here, by the way, out of the gate. But we had Europe cut its central bank rate, or the ECB cut rates for the first time. That's big stuff. Picture says, whenever I come live and I don't see you, I go off. Please don't do that. Hang around with our other guests. They carry the show too, and when we bring people onto the show, we do so for a reason. We think they have something valuable to add to the community show. And at this point, beyond just myself, it was really cool, I got to say. From my perspective, obviously I've done this show for years, but when I step away and I watch other hosts take over the show and completely run it while I'm gone, it is a very cool thing, because I'm like, wow, we've really built a community here, and that's so cool that it's a group effort. So I do hope that you guys enjoyed the different hosts and guests that we had over the show. And I am also very glad to be back and contributing to what the show does each day. All right. So in terms of economic data, I need to give a quick update here. So GDP prints, again, lower than expected. Economic data seems to be cooling and seems to continue to be the case. So let's take a look at this. Economic data, GDP numbers came in lighter than anticipated. Okay, PMI data, what about this? Again, I can use the EDGEFINDER to keep myself up to date even when I'm not staring at this stuff 24/7. That is the entire purpose of the software tool. PMI numbers for manufacturing came in lighter than expected. So some cool down on the manufacturing side. That's not great for the economic output, but then services came in strong. Okay, so some news there. Retail sales, haven't had anything new since I left. May 15th, still showing cool down in the retail sales side of things. Let's keep going. Let's take a look at the jobs number. That's obviously what we're gathered here today for. We'll be getting our latest NFP number. Claims, unemployment claims continue to slowly, gradually grind higher. JOLTS continue to trend lower. Economic data seems to be pointing to one thing: a very gradual decline here. Now, the debate where things get interesting is whether or not this slowdown trend is just a short-term cooling of the economy, which would arguably be a very positive thing because it would help to get inflation under control, or is this the start of a bigger economic downturn, in which case we just swap out the problem of high inflation for slowing economy? That is the question, and I do not know the answer. But I can tell you this. Right now, it seems to be that the story, the ship has turned. And when I say the ship has turned, I'm talking about the dollar. The dollar, to me, seems like it is headed lower. It has continued. We've been bearish on the dollar. It's made a lot of sense to stay bearish on the dollar, in my personal view, because economic data continues to roll in cool. And that cooling economic data means likely inflation problems go away. But the real question is, from there, do you swap it out for economic recession concerns? That's where the bigger picture, I think, is. I see a lot of people saying hello. Thank you all for being here. I'm very glad to be back, and I missed you guys too. Don't worry. I am back for now. We'll be hanging out, making some more content, doing good old trading stuff. But I'm very glad to be back, and just good to see everybody. The wedding was beautiful, by the way. It was in a castle in Ireland. I mean, come on. I'm sorry, I did miss you guys, but Castle in Ireland, live streams. I mean, there's a clear winner there. It's the live streams. All right, let's keep going. Take a look at the S&P 500 again as we get into the NFP jobs numbers. It's not the just in case my wife is listening, it is not the live stream. It is the castle with my wife and Ireland. Okay, yeah, Ireland, beautiful, so green. So the S&P 500, again, hovering just around the all-time highs here as we go into this jobs data. And I texted Frank this morning, who he was asking, what are your thoughts on NFP as we come into this? And of course, Frank, who shows up on the live streams pretty regularly, him and I have been trading together for a number of years. And, I said, I really don't know what happens to stocks today if jobs data comes in weak. I said that if you get jobs data really weak, does the market cheer that and say, well, rate cuts are now certainly coming? Or does the market say, okay, that's just too much bad news in terms of the economy. We might start to chill out on this all-time high stuff. I don't really know. To be honest, the market is very, very emotional right now. Market seems to be rallying on anything. So I would not be surprised if either direction the jobs data comes out, the S&P 500 moves higher. But again, that's not something I'm chasing. I think the big drop in gold is very attractive. If I do see, if you get weak jobs numbers and we're down in these areas here today, I like the idea of buying gold. So I may be entering a trade on that side. We will see. But in terms of setups that I like here today, I'll show you guys my current positions. I shorted gold in the VIP room. Still in this trade. I shorted oil in the VIP room. I don't know if I said gold, but I'm still in this trade. I shorted this one and have been holding on to this one. It's a winner so far, but to be honest with you, it's got to hold this area here. So I'm going to just show you. This is USO for those of you guys who trade stocks or ETFs. It's the same thing as trading oil, just through an ETF. And so I've shorted oil. My position is up $1,000. I've given back a lot of the gains on this trade as markets have rebounded a little bit. I think off of the prospect of rate cuts. Europe did cut their rate, right? ECB cut the rate for the first time. Bank of Canada was the first one to cut rates. You're seeing a trend towards rate cuts. That makes me want to really buy gold. But again, I have to still adhere to my strategy. I will be looking for that. If I take any trade setups, you guys will see it inside of the Discord channel. And if you're not in the Discord channel, we'll send the link to where you can apply to join. If you're not already in the Discord channel, take 2 seconds. Highly recommend that you join the Discord. And that is free to join. You just need to apply here. So again, we got 922 people watching. If you're not already in the Discord, take 2 seconds, come join us. There's a lot of good stuff that happens in there. And let me see. Let me not show all my messaging here. You guys don't need to see that. But let me just show you what the Discord looks like. So I shorted oil. This was kind of a hard trade for me. Like, it's very hard to share my trades or even trade itself when I'm on the go because I feel like I'm out of it. But I did love the oil short setup. I shorted oil, and then that thing just dropped. Oil has just been a nice sell for me. I would love to see cooling jobs data today for 2 of my positions, oil and TLT. This is bonds and oil. Bonds would do well if yields fall on cooling economic data, which they have been recently. It's been good for my trade. And also oil would fall because, again, the idea demand side being threatened would also be bearish for oil, right? So I like the setups here on oil and on TLT. Those are 2 of my positions. I'm also watching gold. In terms of stocks, I have capped my upside. Let me get ready, guys. I'm sorry. I'm out of practice here. I'm a little rusty. Let me switch over to my all markets view. We got less than 1 minute. I'll talk about what I did with my stock positions pretty quick. We got oil in the bottom right here. We've got also, I'm just going to switch this to USO. We're coming into breaking news here in just about 10 seconds ago. Let's go ahead and just do breaking news really quick. All right, guys. Let's see what we get. NFP jobs numbers will be coming out in just a moment. Just pull up the data here. Jobs data should be coming out any second now. Okay, jobs data just came out. Dollar index is up. S&P, Dow, and NAS are down. Euro, pound, gold down here. What would that suggest? Well, I would imagine it's a good jobs data print, but the market's not going to love that because it might hurt the probabilities of rate cuts. All right, payrolls came out. Let's see. Refresh this number. There we go. Okay, so we've got our numbers out here this morning. Average hourly earnings, that was hotter than expected, both month over month and year over year. Don't sleep on that. That's an important figure right there. Non-farm payrolls were higher than anticipated by a long shot, by almost 100,000. They also revised just slightly down the previous months. So this is a hot jobs print so far here. Unemployment rate ticked higher to 4%. So that's one for the bulls on the stock market side. Kind of weird, but they want the unemployment rate to continue to trickle higher. Gold again, and everything else. Strong jobs numbers going to hurt the story for gold here a little bit. Euro, NAS, SPX. How much of a drop are we looking at here? It's not too big. You've got less than 0.5% drop on the indices here this morning. The Russell getting hurt the most, which makes a lot of sense. The interest rate sensitive side of things. Gold down 2.5%. Silver down 4.5% here today, guys. That is a substantial. It's a substantial move. Also, I apologize, but I need to really quick. WTI COUSD. The oil, one of the oil charts that I was using on TradingView stopped working, so I had to switch it over to OANDA's feed. So I just did that really quick. But yeah, interesting moves here this morning. Again, jobs data coming in hotter than expected. The big one here is average hourly earnings, which does add inflationary pressures here. They revised the previous up from 3.9 to 4, and the latest data was expected to come out 3.9, higher than expected here year over year at a 4.1%. This is inflationary to a degree. Because remember, if you get people getting raises, obviously that's great for the individuals who get a raise, and hopefully that helps them out. But what it doesn't do on a big scale is it doesn't help the story of inflation. If everybody's getting raises, they go buy houses, they go buy cars, they go buy, they go travel, and that activity helps to stir more inflation. So the whole fight here with economic data being strong is that contributes to more inflation. So the market is wanting to see, when I say the market, I'm talking about the stock market, Wall Street, et cetera. They want to see rates come down. And in order to see interest rates come down, they need inflation to come down. And so inflation is not helped by these numbers here today. People are getting jobs, people are getting raises, and that, of course, does not help the inflation story. So the market is not loving that here today. The dollar index is up 104.6 here. Let's take a look closer at the dollar index here on an individual level. Let's take a look at DXY just for a moment. And let's go DXY really quick. Switch over to a daily chart view. Again, we're getting a bounce off of this level at 104. Pretty strong one at that. Pretty strong bounce here. Not going to help my TLT position. I bet you I just lost a couple $100 on that. Yeah, look at that. Erased the gains on my TLT trade real quick right there. But this is not a short-term momentum trade. This is more of a swing trade that I've been in for some time. I've actually collected dividends. I've been holding this for a while, and call it interest, call it dividends. But on TLT, it's actually paid as a dividend on TLT. So I've been, after even though I'm down on the P&L here, I've actually collected some dividends on this. So I'm actually up on the position. That being said, if it does continue lower, I'll be holding on to a trade that's not going so hot. And TLT dropping tells you that yields are rising here today. Take a look at the 2-year yield, which is jumping almost 3% on the day. This is telling you that the market says, rate cuts might be under pressure. The story for rate cuts are definitely under pressure here today, with nearly 100,000 jobs added, more so than what was forecasted. Consensus was for us to add 185,000 jobs. Instead, we added 272,000, which is good for the people who got jobs, right? That's not a bad thing. But from an inflationary story perspective, we need the jobs market to continue to cool down. And so last month, we made a big deal about how jobs data came out much cooler. We had 175,000 jobs added last time. This latest one is going to come out once this data updates on the EDGEFINDER. We just popped back up to here, 275. So the market is speaking here today, because what we've just learned is that the market doesn't love, I'm talking again at the stock market does not love strong economic data right now, because strong economic data pushes yields higher. And remember that yields moving higher suggests that interest rates will remain higher for longer. Now, this is just one data point. Again, as I mentioned earlier, we've seen a slew or a collection of cooler than expected economic data coming out of the United States recently. But this data definitely is one of the more important ones. Now, am I going to buy this gold pullback? I actually might. I'm actually looking at this very closely, and I'm going to let price kind of relax here. But if I take a trade, I will share this inside of the Discord channel. So keep that in mind. But the Edge Finder is still giving us a very bullish reading overall on gold. We will lose some score points here this morning on unemployment rate. Actually, this won't lose too many points at all, I don't think. Jobs change, we'll get a -1 on this once the Edge Finder updates, because jobs came out stronger than anticipated. So gold doesn't like that, right? Strong jobs, not great for gold. But the unemployment rate ticked higher. So we're going to get a +1 on that, I think. I believe. And so once this updates, it won't change the score too much. We'll still be in a very bullish camp. I like gold on this pullback. As you get this pullback, I would love to see price make a little bit more of a squeeze lower. And then I'm probably a buyer in this area. If I take that trade, again, I will share it inside of our VIP Discord channel. You can join the free one here. We just dropped that link earlier, but we'll drop it one more time. If you'd like to apply to join the Discord channel, you can get access to the free version by clicking this link here and applying with that. It takes just like 30 seconds. How long does it take the Edge Finder to update? Usually 15 minutes or less. Just depends. But it has several cycles that it's running to pull and fetch latest data for all the different things. Let's have a look at where other things are moving here this morning. The euro is trading lower off of this dollar strength. Same thing with the pound USD rejecting that 1.28, but we did make this level. Talked about this for a long time before I left. This pullback push up to 1.28 on pound. We did in fact see that. We are now rejecting that slightly. Dollar yen pushing higher overall continuously. That dollar yen seems to be. Dollar Swiss bouncing a little bit here this morning. Dollar CAD looking relatively strong. Let's take a look just for a second for my currency traders out there. Let's have a look at some of the major currency pairs. Euro dollar getting a bullish reading. Aussie dollar, pound dollar. These scores, once updating, are going to be a little bit different, but the euro might still hold on to a bullish reading. I'm just going to wait for that to update on my end. Dollar Swiss getting a very bearish reading, which I think is interesting. I will actually be looking at dollar Swiss again, just out of curiosity on that front. If you get a pullback up into this 90.20 level on USD CHF, that might be an interesting trade for me. I'm gonna guess that that's a 50% retracement on the daily chart. Yeah, that's a 50% retracement off the daily level. That might be a trade I'm watching. Let's see what else we've got. In terms of stock or sectors for a second. Pre-market, we've got, let's switch over to the 4-hour chart here. Actually, we'll switch over to the 1-hour chart. Semiconductors dropping on this news. You've got the technology space dropping just slightly, not too much. XLY slightly. XLF, not going to love that, of course. Real estate, definitely not going to love that. Real estate down 1.23% in the pre-market here. Stock market in the U.S. has not yet opened up, but will be doing so pretty soon. You've got utilities trading lower, minus 0.72%. And again, this makes a lot of sense. Utilities, industrials, this area of the market wants to see rate cuts, right? Rate cuts are the very important component to the story for a lot of the market. Technology, NASDAQ, trading lower, but really not seeing, it's not like it's getting beaten up today. I mean, you got to remember, look at this daily chart. This is nothing on the daily chart. The NASDAQ is still a killer right now. Now, you want to talk about a market that just looks disappointing. Take no further look than this poor Russell. The Russell 2000 is small cap stocks, smaller companies in the United States are more susceptible. They're more vulnerable to higher borrowing costs from the Federal Reserve's Fed funds rate. And so what we see here today is that hot jobs print is going to suggest to the market that rate cuts are more on rocky terms. And if you don't get rate cuts, small cap companies, it directly hurts their bottom line because they're borrowing more money. They don't have huge cash reserves. If you take a look at a company like Apple or Nvidia, if they raise rates or they keep rates higher for longer, who cares? They have so much cash. They don't need to borrow money. If they raise interest rates, whatever, just use your cash reserves. We don't need to borrow money. We can just use our cash. But small companies do not always have that luxury. Smaller cap companies are not always sitting on a cash pile. They might need to go raise money, and raising money comes at interest payments. And if interest payments are higher, You see where I'm going with this? The Russell is in a bad spot, and it's been in a bad spot for a long time. I mean, here you go, guys. Look at this. You're trading today on the Russell at the same spot you were in January of 2022. If you held from January of 2022, and you could actually go back further. If you held from December of 2020, January 2021, let's call it, you have not seen any cash appreciation on your shares of IWM, for example, which is a common ETF used to track the price of the Russell. So you're not seeing much appreciation there. Yes, you're seeing overall massive uptrends in the S&P 500 or the NASDAQ, but this is because of a small number of stocks that are just absolutely killing it. The profit machines like Nvidia, Microsoft, Apple, Google. Well, Apple's been kind of a laggard, but Apple's had a big recovery. Apple's, not been the most impressive stock compared to, like this company, which I hate it because I'm not in it. Nvidia. I don't actually hate Nvidia. I would love to be a buyer, but I can't justify chasing the stock price. But Nvidia, monster leader for the stock market here today, trading down 2.3%. And if you're somebody who watches indices, this better be on your watch list. Nvidia is important to this market. If Nvidia falls, the whole thing falls. If Nvidia rises, the whole thing rises. That's been the story. I think it remains the story for the time being. And I'm going to continue to watch it very close myself. The whole story for, tech right now, it's so much so that even the software sector, let's take a look at XSW, guys. XSW, this is a software ETF. Software's not even doing that great. It's all SMH. The semiconductors are the movers and the shakers of this market. If you're talking about the stock market, if you're talking about indices, software companies like Adobe, not trading very impressively. If you take a look at Salesforce, CRM, another prominent name, not trading all that beautifully. So my point was showing you that really quick is just because, you look at this market, is the leadership is all in the chip world. So chip world relies on some things here to stay the course. In order for chips, in order for the stock market to keep going, you need the chip story to stay strong. For the chip story to stay strong, you need chips. I'm talking about semiconductors, the stuff that's in all of our computers and all of our technology. There's a huge demand for that. You need the economy itself to stay strong. So jobs data coming out strong today is good, but if they keep interest rates high for too long, the market seems to think that, nothing is, there's no vulnerabilities here to the chip world because rates are, they're going to come down. But if they don't, the story becomes challenged. Anyways, let me get back on course here for a second. TLT, a position that I'm in, flat. Let's take a look at oil. I don't actually know how oil reacted to this. Yeah, it's kind of a mixed bag. Jobs data being strong is kind of actually a bull case or a bullish thing for oil, right? I mentioned earlier that weak jobs would have been probably better for my position, but I'm just going to hold it. I have a game plan on oil. My stop loss is locked in profit here. If this market breaks through resistance, I am out. I will take profits. I'm floating $1,100 on this position. But if oil rolls over, right, which I think it may, my reasoning for being short on oil is predominantly based on the EDGEFINDER scanned that economic data was coming out light. And so I got short on oil on a pullback here. Oil came up to this level. I went short, stop above. Market has rolled over and bounced a little bit. Nvidia is propping up the indices at the moment. Yeah, it really is. And that's to me, it's like, if you're watching indices, you just have to be careful. You just have to be keened in on what's happening with the Nvidia story. You're talking about a stock that is just unbeatable right now. Like, it is the massive, it is the top dog by far in the market story right now, which is fine. I'm not saying that as a bearish thing. I'm just saying, I would love to see more broadening in the market, etc. And I'll tell you this, I actually do really like software companies. I think that they're out of rotation. If you get a bigger, broader stock market pullback, I really like individual names like Salesforce, like Adobe, CrowdStrike. I like some individual names. I haven't picked up many of them. One of the ones that I did pick up was PayPal. PayPal is, it's a small position for me, but I own 152 shares of PayPal. I like this company. Also susceptible to a slowdown. And again, we're trying to keep close tabs on what happens with this. But right now, I don't think the story is slowdown. In fact, I actually think that I go back to the stock market and whether or not I'm bullish. This jobs data, actually, the market itself might not like it, but I actually do. I actually want jobs to stay strong. I want the economy to stay strong. I want to see industrials perform well. I want to see inflation. Yes, cool, but I don't want to see jobs slow and PMIs go. I don't want to see all the economic data cool. So if we see jobs data slowing down, all that stuff, then I want to stay long gold and TLT, which is where I currently am, because we've seen a trend towards economic data starting to slow. So I'm long these two things, right? But if we see economic data actually improve, and jobs data today was good, right? You're going to see once that updates that jobs data was good for the S&P 500, and I might actually get interested in a bullish setup if we continue to see strong economic data. One thing you could point, services PMIs were better than expected, and services PMIs are a huge component of the US economy. So that's propping up against some of the bullishness. My hesitation again goes back to NVIDIA. I love the company. I'd love to own some shares of the company, but I can't help but feel like this is a little bit of a dangerous looking chart to me, because companies don't do this forever. Sure, I'm not saying that it can't go much higher. Is NVIDIA going to be a $2,000 stock, or after their stock split, which comes in just a little bit, June 10th, they're going to be announcing a 10-for-1 stock split. So the share price will go to roughly 120, not 1,209. Is it going to be a $150 stock or a $1,500 stock? I mean, I think it probably will. I just think also you're probably going to see intermediate periods between now and then. I don't think you just go straight shot forever. I think at some point this market pulls back. That being said, I'm not short NVIDIA. I'm not betting against NVIDIA. I'm not betting against the market. I'm just pointing out that I am cautious when I see things screaming in one direction, despite a lot of what I see as potential red flags in the market. By the way, guys, we are doing a flash sale right now on the EDGEFINDER. Today is the last day. If you have not already heard, we're doing 25% off the EDGEFINDER. And the EDGEFINDER is, of course, the tool that myself and our team and several other people who you see on these shows use to help spot what is happening in the economy. If you are somebody who is aspiring to use economic data to your advantage, this is a heads up that today is the last day for the EDGEFINDER 25% off flash sale that we are doing. If that is something that you are looking to take advantage of before the end of the day, you've got to send a direct message using the link that's just been dropped in the chat here. And if you're watching at a later point in time, it will probably still be available to you, but you're going to want to click the first link in the description of this live stream down below. So definitely check that out. If you have not already taken advantage of it, again, get 25% off the EDGEFINDER before this sale ends. And again, that is ending today. So that offer goes until the end of the day, and then it is closing up shop. So take advantage if you have not already. Okay, real quick, guys, we're going to take a quick break, and then we're going to be joined by the one and only Kenzo, who's coming up just after this quick break. Stay tuned.
Attention A1 Trading Show fans. If you're interested in getting free access to the EDGEFINDER or our premium trade alerts, listen up. For a limited time, our show's partnered broker Eightcap is giving out free access to our products when you sign up for a new trading account with them. If you already have a broker, you may want to consider switching to Eightcap because of their low trading costs, a wide range of trading assets, and their amazing customer support. If you'd like to get access to our software and Discord server for free, click the link being dropped in the chat right now and ask one of our team members for more information. Don't miss your chance for free products and an award-winning broker. Now back to the A1 Trading Show.
All right, guys, and we are back with Kenzo from Extra Hot Forex. Hey, Kenzo, how are you?
I'm doing great. Thanks, and you, man.
I'm doing great, and it's good to be back with you here on the show, and here for a special day. Kenzo, the NFP jobs numbers just came out, and they were more impressive than what was expected. We had jobs data for those of you who missed the actual announcement. Jobs data came out: 272,000 jobs added compared to what was expected to just be 185,000. Unemployment rate did tick higher, but wage growth was strong. And it's a very interesting
Mm.
overall report. What are your thoughts on what we saw here today?
No, it was not really that bad. When NFP is going up like that, especially when the economy is not really performing very well. So the only thing that won't be nice is if maybe we also see CPI going up. That is going to be a problem. But for now,
Mm.
when people are getting some jobs, that it's actually good for the whole economy.
Yeah, no, I agree with you. I mean, the thing is, I was pointing this out earlier that the market itself didn't love this report initially because perhaps
Mm.
the idea is that, well, if you get higher jobs, it's going to lead to what you just mentioned, perhaps a hotter inflation print. And if you see inflation stay hot, then the Fed may not cut rates. But
Yes.
I'm kind of in the thought process of I actually want the jobs data to be strong if I'm going to be bullish on the stock market. I like the idea of people getting hired, that doesn't make me too afraid as long as we do kind of still have the inflation story, the backdrop overall. I'm not too worried by this. That being said, the market is really, really showing its true colors here by saying we want economic data to continue to come in smooth and lighter than expected in order to really
Mm.
solidify that rate cuts are coming. Is that what you're thinking too?
Yes. Plus, if you check the stock markets, like they are not really like on a negative side. What we see, they are actually on the highest levels. If you see,
Yeah,
if you check maybe S&P 500, Nasdaq, they all actually higher. So for us to have a nice room to buy again, we know we have to buy low. So it means we have to wait for the market to go a little bit lower. So it's
sure.
actually a good thing.
Yeah, and that being said, you had just a incredibly quick drop followed by a very, very strong rally here recently. It just goes to show the market is finding any reason it wants to right now to continue to push higher overall. And I was pointing out earlier that we talk sometimes about individual companies and just how important it is. It seems like the whole market is
Mm.
being just carried still by the Nvidia story. I don't know if you trade Nvidia specifically, if you just watch it, but the Nvidia story is just a crazy one. This stock is just a seemingly can do no wrong stock, and is pulling up the whole market. What are your thoughts on this? Do you think it just keeps going, or do you think it's due for a bigger pullback? What are your thoughts?
No, I think it's a good thing at the moment because if you still remember the time they released their earnings, the market did not really move that much. It
Yes,
did, but not that much. And if you checked other companies which also are actually adapting to AI, they did not really move that much because I think it was that week where they were talking about interest rates cuts. And I think there were people who actually said, no, they don't really think it's a good time to cut the rate. And that actually overshadowed the results from NVIDIA. But when we check, actually, those results were very good, and it shows that AI is not really going anywhere, and people are starting to make money with that. You see, so and we saw a few weeks ago, I think it's last week, we saw AMD and Intel also doing the same with introduction of their AI. So that also boosts the AI thing,
mm,
especially on Nvidia, because it seems to be the one which has the bigger market share. So it's a very nice bullish actually move. I think it can still go even higher, but somewhere somehow a reversal is going to be there.
sure. Yeah. No, I agree. I think it's a really strong company, and for a good reason. It continues to pull the market higher. I do think that when you get moves like that, you've got to be a little careful that the pullback can be pretty violent. But I do think that overall, the company probably continues to go higher and continues to support the stock market story. That being said, Kenzo, I also want to ask you about the dollar index and gold, because a lot of traders, of course, in the audience are very focused on gold and the dollar itself. The dollar's bouncing off of this level here today. Do you think that this is perhaps, are we finding a bottom here for the dollar index and potentially going to start breaking out? Or do you think that this is just a bounce and that the bear trend could continue here and perhaps take out 104? What are your thoughts on the dollar index right now?
Yeah, I think we will see, as you can see, we actually on a very nice downtrend structure, even though it's not really that aggressive. I'm expecting to see a continuation of that. So yes, now we just had the news, but I think we might have something like this. I think we're gonna see a continuation of that sell. So I don't really see it continuing to go to the upside. It might be good for now, but the overall structure might actually continue to go down.
Sure. And, a weakening dollar would be helpful to a couple different areas of the market, the indices, of course, but also gold. Gold has, again, seen a pretty substantial drop today. In fact, in the market today, I would say for our audience, probably the most interesting topic right now is this big drop in the 1-day chart view of gold. I mean, take a look at the hourly chart here, and you've had a drop from peak to trough of near just about 3% on the price of gold, trading from around 23.87 down to where we are now. It's a big drop. And, we've come into a level of what kind of seems like support on the daily chart here for gold. But do you think that this jobs data coming out so strong could lead to a bigger pullback? Or do you think this is a potential dip buying opportunity?
No, I don't think that is going to continue that much, because even if we have NFP today, which is very good, I think the topic that is still actually it's actually bigger than NFP. It's still interest rates cuts. Are they going to cut the rates or not? Because we know that actually interest rates, they don't really come every month, but NFP, it's monthly. It's very important, but not really like interest rates. So if they're gonna cut the rates, I think it's where we're gonna see a nice continuation. Maybe, sorry, if they don't cut the rates, it's where we're gonna see a continuation. But if they do cut, I'm expecting to see a very nice reversal.
Yeah,
but at the moment, it seems like even though we have maybe NFP and the market tried to move, I don't think it's enough to change the overall move. Maybe two candlesticks might be stronger or bearish, but at the end of the day, the market might still reverse and continue with that structure.
Well, and Kenzo, there's something I would even add to that. It's all, you brought it back into focus, that the whole thing about gold right now is all about interest rate cuts. And we did get a little bit of news this week from the ECB. They cut the rates, and Bank of Canada cut the rates. So what we're seeing here is a bit of a trend towards, okay, the cat is out of the bag. We're starting to see, pen to parchment, right? They're actually doing it. They're actually starting to cut rates. And that by itself, I think, is actually a positive for gold. And a lot of times, with the stock market, there is this idea that you really want to be buying stocks before they cut the rates, the rumor of the rate cuts. But then when they actually start to cut the rates, a lot of times you want to actually be long gold, because a lot of times what happens is that the economy sliding hard enough is what really gets rate cuts to happen. And in that case, the economy sliding enough could hurt earnings reports for stocks. And perhaps the best time to be long stocks is before the rate cuts. And after the rate cuts start to roll in, maybe that's where you want to be more long gold. At least in my opinion, that's kind of the play. I want to be long gold in both the rumor of rate cuts as well as when they actually start to rate cut. And although this is not the US that cut rates this week, the ECB and the Bank of Canada making that move, is a great start, I think, for the overall continued bullish story of gold. I think we're consolidating here. If you take a look at the daily chart, we have not moved that far, but I don't take that as a bearish signal, right? I take this as just a pause. We had a huge run up in the price of gold. We are now trading sideways on a daily level, but to me, I'm like you, where I think that levels of support are buying opportunities to add to a position and to see if this thing can continue higher. If it doesn't, if it completely
Yes.
runs through all of that, then obviously I was wrong about that idea. But I think we're on the same page with that.
Yes, yeah, you're right, man. Already we see other banks trying to cut the rates. So that obviously there is going to be a trend going further. And I don't see US not cutting the rates. So I think there will be, it's just going to be obvious that they're going to cut the rates. And at the moment, since it's going to be like that, the market will be pricing itself before that. So it means it's actually a good time for people to buy the stocks, because mostly when we buy shares or stocks, we actually buying when we expect something good to happen. So which means the market might be trying to price itself to future prices. So if maybe they cut the rates, we might not really see that bigger move, but from this week or previously or previous before they cut the rates, that is going to be a very nice time for us to have those bigger moves. Once they cut, it's no longer going to be a surprise. So we'll know that, oh, we were expecting that. But now I think we might have some serious reversals, especially when the market is going down like now. I think it's going to be a very good time for us just to jump in. But the thing is, we just need to get in at the right time so that we don't really have the swings. But I think we are going to see some serious reversals.
Sure. Yeah, I think we're on the same page with that for sure, Kenzo. I mean, that's the thing is when it comes to news, what you guys have to understand is the market is always looking ahead of time. A lot of traders who are new, they think that the news is trading off of what happened, just now. But the market is always actually trading on what is expected to happen in the future, right? So everyone, who is looking at the markets on rate cuts, they're wondering, what are rate cuts going to look like for the remainder of this year? What are we going to look like in December? What are we going to look like in January of 2025? The market is very much looking ahead of time to try and forecast to the best of its ability where things are going from here. So the stock market today trading lower because it's thinking, well, hey, jobs data is coming in strong. That might prolong when we see our first rate cut, which that rate cut is what's going to help. The idea is rate cuts would stimulate the economy, make affordable borrowing happen again, and then people could go out and spend, and that's going to be good for earnings, right? That's the idea around rate cuts. But if you get hot jobs prints in the short term, the idea is, oh no, that hurts the when that rate cut is going to come out. So people are selling some shares. Now, that being said, as Kenzo mentioned earlier, I actually think that pullback, if we get one, is a great buying opportunity to pick up shares at a discount, at a pullback, if we can get it. But again, we will just have to see. This market seems to want to buy every little dip, so it's everybody's kind of got the same idea, I think. So we'll have to continue to see. Kenzo, what else are you watching? Are you watching any currency pairs or any other setups that you're in right now?
Yeah, since we had NFP, I was just waiting for the news. Then after that, maybe we can act. But at the moment, it seems like that gold will be trying to reverse from this support area. Maybe we might start to buy then, I think maybe up to next week, if it starts to go a little bit higher. Another thing, we had Euro USD, but we were just waiting for a reversal because I think the market is starting to give us a very nice uptrend structure after the breakout. So I'm waiting for the market to actually continue to go even higher. Especially, we see that already Europe did cut their rates. Now it's about the dollar. So once US cut their rates, I think Europe is going to gain their momentum and we're going to continue going up like that. So the other ones, they're just quite similar because it was GBP. GBP was also on a very nice uptrend, but now it's reversing towards our now on a very nice uptrend structure. So we expect the market to continue to go to the upside like that. So now we are on the support area. If it respects this level, we will be expecting to see a very nice push. So I don't really think this NFP is going to actually affect much of our structure. I think it's just a nice reversal. So also the one that I was checking, it was USD, JPY, and Canada and JPY. They were on this very nice support. So we were expecting some very nice reversals. So this actually did happen exactly the way we wanted. So as the market was actually following the trend, so it was just straightforward on our side. So, but mostly I think Euro USD, GBP USD is going to be the ones that I'm going to look at, and also gold.
Fair enough. Yeah, I think I'm watching gold too today. We'll see if we stay near this current level, and I'd like to see how the stock market open looks. Just U.S. time 9:30. We have in 20 minutes the stock market opens up. I also trade GLD shares, so I'm going to wait for that to open up. But I may get long on GLD if I take that position. Of course, I'll share it inside of the Discord channel. But I kind of like that. I think we found a similar trade on that, Kenzo. For me, I think this would be attempt number one. And if this doesn't work out, attempt number two for me would be around 2290 on gold. So I'll be watching this. I think that, again, this is a bigger overall opportunity to potentially add to what is an uptrend. I think we're just going sideways for now, as long as you have the willingness to wait on it, because it could take some time. It could go sideways. It could trend lower for a little bit. But I think the overall story for gold for the remainder of 2024 is still looking bullish, at least according to what I focus on. So maybe we'll both be in the same trade next time we talk, Kenzo. We'll just have to see.
Exactly. Yeah, for now, we just have to wait and see. Maybe next week things, they will be going in our favor. And from there, I don't know if we will be able to buy, if we're going to buy. But today and Monday, I think the market will be trying to go crazy.
Yep. Fair enough. Well, Kenzo, I want to thank you for coming on the show here. And to everybody who's listening, if you do not already follow Kenzo on his own YouTube channel, we're going to be dropping a link here in the chat for you to make sure to go subscribe and support his work. Kenzo does a great, as you saw here in our conversation here, he does a good mix of technicals and fundamental analysis, looking at economic data, what central banks are going to do next, and all that good stuff. So if you're not already following him on his own YouTube channel, please take a second to do so. He's got some great free content over there that might be useful to you. And there we go. Just dropped it in the chat. Kenzo, thank you very much for coming on the show, and we will see you next week.
Thank you very much, man.
All right, man. See ya. Yep. Always good to have Kenzo on the show. Again, stand-up guy and knows his stuff. So definitely go support him if you have not already. It does help us out. And I also wanted to mention something. If you're an EDGEFINDER user, I mentioned this before I left, but I've been using it myself, and it is so incredibly useful that I wanted to share it. If you're an EDGEFINDER user, head over to your scroll bar here and go down to live stream schedule. What is so cool about this is that you can now see our stream team who is coordinating these live shows each day with all of our different guests and lineups. You can always check in on what the latest live stream prep plan is going to look like. So, James and Chandler, they coordinate everybody who's coming on the show, what time things are happening at. So definitely make sure, if you have not already, here's another way you can find this information. If you haven't bookmarked this page, if you're a regular show fan, head over to a1trading.com and then go to right here, live stream schedule. Okay. Click live stream schedule. You can also find that same data points here. So if you are a real fan of the show, take 2 seconds here, go bookmark this page. Again, just bookmark it if you have Chrome. And that way you can always tune in to see when your favorite guests are coming on the show, what we're going to be streaming. And for your convenience, we've also included a link to the show so that you can click there and join it easily. So just some improvements that we've been working on here behind the scenes to continuously improve the show. And also, heads up, remember, the EDGEFINDER is currently 25% off. If you have not already taken advantage of the 25% off flash sale, We're going to be sending a link here in the chat. And guys, we got Frank coming in here in just a moment. So that we got ourselves a little special conversation coming. Again, click this link if you have not already taken advantage of the 25% off discount on the EDGEFINDER. This flash sale is ending here today. Today is the last day. So to celebrate NFP Day, pick up a copy at 25% off. If you're not already using the EDGEFINDER for economic data, highly recommended. Stick around for just a second. We're going to be talking to Frank about what the jobs data just showed us here about the economy, about the markets going forward. So stick around. We'll be right back with Frank just after this. Hold on, maybe not. I got it. Give me a second. Here we go. There we go.
Attention, A1 Trading Show fans. If you're interested in getting free access to the EDGEFINDER or our premium trade alerts, listen up. For a limited time, our show's partnered broker, Eightcap, is giving out free access to our products when you sign up for a new trading account with them. If you already have a broker, you may want to consider switching to Eightcap because of their low trading costs, a wide range of trading assets, and their amazing.
Howdy, folks. I hope you're enjoying the A1 Trading Show. And I just want to let you know that we are currently doing a flash sale on the EDGEFINDER. This week, you can currently get 25% off if you send a direct message to our support staff standing by who helps keep the show running smoothly. If you use the link that's being dropped. Sorry about that, guys. We have a little technical difficulties, but we're back. Something happened with our stream software, so I apologize for that. Let me just go ahead and switch this, and then we'll bring him in. We'll say hello to Frank. Hey, Frank, what's up, man? Oh, I can't hear you.
Was muted.
There you are. What's up, man? How's it going?
Pretty good. I haven't seen you since you got back, so
I know I've only seen you on screen. I haven't seen you in person yet either. So, hope your week here, you guys didn't party too much while I was gone. Frank, the jobs data came in interesting. I think you pointed out this morning that you thought it might be coming in hot. It did in fact come in hot. Year over year earnings actually were raised up to 4.1%. So kind of inflationary. Jobs data, 272,000 jobs compared to 185K expected. Unemployment rate did tick up to 4%. What are your thoughts on this? Do you think the market's reaction makes sense? Down 0.3% here on the day. Not a huge move either way.
Yeah, I mean, I think this is a concern, but I don't necessarily think that it's going to cause a sell-off just because every time the market dips, it just gets bought right back up. And I guess, honestly, now, so we've seen NFP came in hotter, but private payrolls on Wednesday came in lower. Was it manufacturing or services PMI that came in lower? And then we saw a growth in wages, which is not it's not a good sign for, I guess, seeing unemployment rate tick higher.
Sure.
Because what this could imply is that inflation is going to be higher next week when CPI reports come out. And I think you're gonna read articles that say we have a strong jobs market, but I don't necessarily think that's the truth. Just because we saw lower numbers in private payrolls, and then we're seeing last month's revision was down. Mm-hmm. Yeah, and JOLTS was down, so job openings is
claims have been rising.
Claims was higher than they've been in like the last. I think the second highest has been in the last 13 weeks. So nothing great in the labor market, in my opinion. I think investors want that rate cut, but the problem is you don't want to see their hand to be forced. You don't want to see them cut because they feel like they have to. And that's a big concern. ECB already cut rates, which is putting pressure on the Fed. And the Fed is, obviously they're not looking to cut rates or hike rates yet. So, at some point we still have a forecast of one in September, which is, I guess plausible. I don't really think we're going to cut, but they might feel forced to, and that's the problem.
Sure.
here.
So just an updated look at the Fed Watch tool here this morning. So we've got for September now getting a 50% chance that we will see a rate cut in September. So September is back in the battleground, it seems like. Just a slight preference for the first rate cut to still happen in September. But really now the probabilities of the first rate cut confidently are still November. So we just saw that swing back just in a few days. And yet, stock market not seeing too big of a drop off of this. I mean, not even a 1% drop off of this really hot jobs data. Kind of interesting. But again, the September expectations are now 50% chance we see our first rate cut by that point. Well, 55%, let's call it. And then really the first confident decisions, November and December, almost a certainty, at least almost a 90% chance that we have seen our first rate cut. But again, these are just probabilities. And Frank, you and I have talked about this many times. These probabilities have been so off over time. They've changed so much from the beginning of this year. The first rate cut was expected to be in March. We are nowhere near, seeing rate cuts closing in. There was a point where it was like, oh, we're gonna have to push it back to June. June's a 99.4% chance that we don't see a rate cut. July, same kind of story. Economic data has been showing signs of cooling. You mentioned earlier, just a second ago, that PMI data. We saw cooling in the PMI data for manufacturing, but services was strong. So that kind of pushes back rate cuts as services is the larger component of the economy in the US. So yeah, it's kind of interesting. I don't know when that first rate cut does actually start to come into the picture. But the stock market is kind of unfazed. I pointed this out too, though, Frank. The stock market is just being so buoyed by the big 10 stocks or the big 5 stocks, really, because
I was going to say that.
Yeah, look at the Russell. I mean,
it depends on, small caps are down. I think what the direction for at least the S&P and the NASDAQ depend on where NVIDIA goes. And that's been just, NVIDIA's just been an absolutely crazy stock the past couple months. And now they're going to do a stock split and everyone wants to get in. So I think if NVIDIA has a good day, then the market's going to have a good day. Even if you look at the heat map and everything's down, if NVIDIA's up, the S&P is probably going to be up because now it's over a $3 trillion market cap, which is the second most valuable.
Apple.
Second most valuable company in the world, which is kind of wild. So
It definitely is. Frank, what do you think about gold here today? Do you think this pullback is interesting? I mean, you're seeing jobs data come out hot, but a lot of other economic data is still cool, and rate cuts are starting to form in Europe. What do you think on this?
I don't really understand the dip for gold because I think the dollar is going to be weaker in the futures because we're gonna have cuts at some point. So regardless of whether it's a bullish or bearish cut for the indices, it's still going to be a weaker dollar in the future. So seeing that gold dip today after having 2 good days, I don't necessarily think that's telling us anything. This might just be a reaction, but I mean, it seems to be moving with the market, which is also kind of confusing because you want worse economic data for gold to be bullish. And that's what we have been seeing. Other than NFP, we've seen every other number for the most part just turn out to be like a hawkish look. So I think gold is the better play. I think it's a better hedge than stocks right now because regardless, the dollars is going to go weaker and yields are going to fall at some point. And whether it be a good economy or bad economy, it's still going to be weak dollar, and gold just trades directly against that.
Yeah, I typically agree. I still just keep coming back to, right now I struggle with stocks. I struggle with, yes, it is true. Every dip gets bought, but I mentioned this earlier and I texted this to you, but I haven't mentioned it to the audience. I actually sold calls against my my existing VOO and XLK positions. So that is the S&P 500 and my technology ETF. The thought process behind that was that I just don't see tremendous upside from here for the stock market right now. In the long term, sure. Even in the midterm for the rest of the year, sure. But right now, I just see that there's just a lot of headwinds. There's a lot of, data points that are not super promising. Yes, she had better than expected PMIs for services, but manufacturing was kind of light. Jobs data continues to cool, which, some bulls would argue that is just going to be rate cuts, and that's great. But I would say that this is a little concerning. I think that this trend we talked about earlier, look how clean the JOLTS job openings numbers are trending lower. Unemployment rate will show up here at 4% here later today or shortly once that updates. Jobs data is stubbornly staying in there. But my point with showing you all that is I actually like the slowdown in economic data as a gold long story, not as a stock market long story, because I think that this slowdown in the economy, I've said this for months, and I've kind of been, wrong to a degree, but I think the slowdown in economic data will end up actually being better for gold than stocks at some point.
I agree.
So yeah.
But yeah, like you said, I don't know if we can justify being this high.
Yeah.
I don't really understand what could push this market higher, but I mean, you don't necessarily want to stand in its way.
Yeah.
But right now, there's so many things pointing towards it not being. I mean, it can be bullish in the midterm or the long term, but right now we're at all-time highs, and we're seeing these numbers right now. Like, how much further can it even go from here? Even with Nvidia carrying it forward, I'm just trying to figure that out. So
Yeah.
I'm not like I still hold a lot of stuff, but I'm not buying anything new.
Yeah, and I feel the same way. There is one area of the market, Frank, that I'm very much interested on a dip, and I'll say this now before the dip happens, and everybody who's listening can check in on me. But if we do see an actual dip in the market at some point, like a sustained couple weeks of downturn, what I am most interested in is not actually the chip companies. It's some of the stuff that's gotten thrown out because of the chip companies, arguably, which is software companies. So like CRM, Frank, I like this stock a lot. I like CRM. I like Adobe. These are software companies, and they have been out of favor. Like many companies that specialize in software have been out of favor. And one of the cases for this is that software companies are, in terms of big company budgets, they are allocating a lot of money right now to semiconductors, right? They're buying chips. And so what's taken the pain point of that is that some of the spending that's gone into software companies like a Salesforce technology, maybe they're seeing a little bit of a pullback in earnings because everybody wants to buy chips. But I think these are companies that I want to own for the long term. You're talking about things like Shopify, thinking things like Adobe, things like PayPal, things like CRM, Salesforce, CrowdStrike, Palo Alto. These companies, even though the market has had a crazy run up, take a look at XSW. These are software and services ETF. This tracks many companies. It's not nearly as impressive as if you were to take a look at SMH. And while I do want to own SMH myself, I want to own ETFs or an ETF that tracks chips. I really want to own, because they're already kind of out of favor, but I want to own them for the long term, software companies. So if we get a broader sell-off, where I will probably kind of dip my hands into first will be software companies. And because again, I think that they have a place in the future. I think that the chip stuff, while it is carrying the market right now and it's exciting stuff, I think there's some great companies in the software space that are getting a little rotated out of favor, and will have their day in the sun again. But I just wanted to share that because that is, for me, what I'm kind of most interested in picking up shares in if we do see a broader sell-off.
Yeah. I mean, if we do see a sell off and prices start coming down, yes, I would start looking to buy. I'm just right now it doesn't really seem like it's worth it, because even if you do buy
Yeah.
how much further will it go up before you can get it at a cheaper price? So
Right. Exactly. And that's kind of how I feel is I just have so many things that are on the watch list. They're on my list of things I'd like to buy, but I'm not going to touch them until I see, a proper pullback, because this market, here's the thing. I remind this to people very often because it's been a year of just straight up for the NASDAQ and the S&P 500, but this is not how the market behaves all the time. Now, I'm not saying you want to short it. I'm not saying you want to bet against it or anything of that nature. I'm just saying that you don't want to get overly used to, well, every dip gets bought, so just buy every dip, because if you were to take a look at Cisco, this is the example that many people point out. Cisco was the darling in the early 2000s, 1990s. Everybody wanted to buy this company because they were going to be the big internet winner, and this was at the time the obvious play. Now to be fair, Nvidia has massive earnings, but they have massive earnings because of the prospect of AI. But many companies are not yet fully making a bunch of money off of AI. So even though Nvidia is making a ton of money selling the technology for AI, what if AI technologies are not, what if there's no big earnings backlog that supports the purchase of them, and then the demand for AI chips dries up dramatically? Like that could happen. I'm not saying I think that will happen, but just be careful that you're not buying Nvidia and making the same mistake that so many people did on Cisco, which was thinking that, well, the massive earnings are coming, but we just got to wait for them. They did show up, but there was so much time in between before the internet really became a powerhouse actual earnings generator for companies. It took time for that technology to actually catch up to the hype. So when I see Nvidia doing something like this, where it is making these kinds of moves, I'm not saying that I think Nvidia will have a 90% drop like Cisco did, but you just have to be careful that you're not chasing the hype, because it can change and it can really destroy people's money if they're not careful.
yeah, I agree. It also, even more recently, you go back to 21 and you look at the EV demand.
Oh yeah.
The forecasts for all those companies and growth were so substantial, and looking forward just seemed very bullish. And then all of a sudden that demand goes away and the stocks start to crumble a bit, and now this is the time where it has to prove itself. So
Yep.
all that hype, this is the period of growth that they want to see. So Nvidia's it's not gonna go up forever, and we're just gonna have to wait.
Yeah. You just have to be, it in the long term, things don't typically move like this forever. And it doesn't make me an Nvidia bear, because I don't have anything against this company. I think it's a game changer. I think it's a wonderful company that makes a ton of money. But the actual question is what they're selling going to generate a massive surge in profits for all of the companies that are buying them, which in then turn will continue to pump the stock further? Or is there an issue where, yes, they're selling the products, the chips, for a ton of money, but if there's not a good enough ROI in the years to come for these companies that are spending all this money investing into Nvidia's chips, if there's not a massive return on investment anytime soon, it could hurt the demand for chips themselves as people, the hype dries up. So just be careful. Nvidia's go
I
ahead.
have a question for you.
Yep.
If when Nvidia does its 10-to-1 stock split, are you gonna buy it?
No. I think for me, do I want to buy Nvidia? I do. I absolutely do. But I think I'm going to wait for people to, I really like to wait for stuff to just get, I like to be buying, especially if I'm buying a stock, I like to be buying a stock when people don't like the stock anymore. I've talked to you kind of
No one
recently.
likes Tesla. Yeah,
Yeah, Tesla. We've talked
exactly.
about Tesla. Is this company going to be game changer and potentially build technologies that, compete with Uber or, ride share or self-driving cars? I think that they're on the forefront of that. I think that has a place in the future. So I like the idea of owning a little Tesla. They make money, you know, it's a company I like, but I don't want to buy Tesla here because look what can happen to people who buy this. I mean, if you had bought during this hype, you're currently sitting years later with a 50% drawdown on your purchase. And that's not even if you bought the top. Many people buy the top and they'd be sitting at almost a 60% drawdown. So I think in the longer term, Frank, I think patience, they really say patience pays for a reason, and buying hype and chasing the excitement is just very dangerous. Now, from a trader's perspective, I think you and I do that all the time. We buy hype, we sell fear, we trade that short term, but we're using stop losses. We're cutting off things that stop working pretty quick. But if you're more talking longer term swing trades or investments, position trades, whatever, chasing hype is really dangerous.
Yeah, definitely don't want to do that, and especially in times when everyone's talking about it. Like
Yeah.
I saw on CNBC, one of the I think it was one of the guests was talking about how their parents were texting them about Nvidia stock. Just
Yeah.
reminded me of, you know, how everyone started talking about GameStop. It's not the same company, obviously. Like Nvidia is legit, but
Right.
it's the hype around AI and its growth. It's a great opportunity for companies like that, but you can't run up forever, and eventually the interest will just die off, and then people will start to hate Nvidia, and that's when you buy Nvidia.
That's you're so spot on, Frank. Because I mean, we've seen this too many times. I've just seen this too many times to go out and buy Nvidia shares because we've talked about this so many times. Remember Bitcoin? We saw this same story multiple times in 2017. The Bitcoin thing was going crazy, and everybody was talking about it. People who had no business talking about financial markets were saying, "Should I buy some Bitcoin? Should I buy some Bitcoin?" And the answer, the worst thing is that for some people, the answer was buy the highs, and they learned that if I buy the highs, I can just make a ton of money. So they just dumped more and more into it until it had a huge drawdown. But the point is, just like what you just said, if you wanted to buy Bitcoin, okay, cool. Watch the hype from the sidelines. But more times than not, there comes an opportunity when everyone else who shouldn't have been touching it in the first place gets out of the way, and you can come in, you can scoop up great discount buys once the fear sets in and the market sells off. It happened a second time on Bitcoin. You had a huge run up followed by a multi-year. There was, I don't know if you remember this, Frank, but there was no rush to buy Bitcoin at great prices during this time. I remember being like, I don't even know if I want to buy it down here. It seems like it could just go to zero. But that's when you want to buy something. If you want to be, just remember the bullishness that you have on Nvidia right now and save it for when it's down 40%. That's when you want to buy Nvidia.
Yeah. It's all psychology. People buy into the hype, and then they forget about it once it starts to, you know, when the stock price starts to suffer a bit, everyone, you know, begins to dislike the company and you know, lose interest, and then that's the time when, you know, the big money makers are putting everything into it.
Yeah. And when it happens, the thing I'm trying to get at is that feeling of FOMO is it's such a lie. It's such a dangerous trap because there's no rush when the thing actually starts selling. When Nvidia really starts to have like a turn to the downside, there will be no rush. Like you could be you could wait for a long time, buy it, and still be way early. Like there's just like you have so much time on both ends. So to be fair, if you're a bull and you're trading this thing, you probably do have you have had and probably still do have time to play the uptrend. But understand that when this market flips into a downtrend, and it will at some point or another, the trend will go a lot longer than people. It happens on both sides. People get overly excited and it goes for way longer, and they get overly bearish and it goes for much longer than what happens on the other side. So
Yeah.
just a lesson. Frank and I have been doing this for a while. We've seen way too many stories like this. And I mean, Nvidia is special. It is a darling stock for sure, but just be careful, and just be careful that, you know, be brave when everybody else is terrified, but be very nervous, very cautious when the market is just going straight up like that forever.
Yeah, and trading the hype is one thing. Like
Yeah.
in the next couple of weeks, if you think price is going to go higher because of the stock split and there's more, I guess, demand because it's not a cheaper company, it's just more affordable for every investor. So if you can look at a smaller stock price, maybe it'll increase participation and maybe more people will be buying into it. And I mean, yeah, trading that hype is one thing, but if you're buying and holding at all-time highs, thinking it's going to go higher, it's not really the smartest thing to do.
Well, and the last thing I'll leave us with, Frank, too, just to offer your point that you just made there. So here's something else to think about, guys. Frank's talking about trading the hype. Apple had really good earnings. They popped higher. And there's also a developers conference coming up very soon. This right here is a beautiful example of a hype trade. So obviously we have hindsight in our favor, but my point is this: they had great, buybacks. Earnings were, they were mixed, but overall they had great buybacks. There's a lot of hype for the stock. And there was the rumor that, and there still is the rumor that, we don't know what's going to happen, but there's this rumor that Apple is going to make their big AI push at their upcoming conference. And so that is a trade that you could totally be trading, or have been trading, where you said, okay, well, Apple's going to have some big announcement. People are getting excited ahead of the time, and you could trade the buy the rumor, sell the news kind of idea. But that is a constructive approach to chasing, to be fair, a stock price that has already jumped up. There's constructive ways to do it where you still manage your risk. What's not constructive is chasing NVIDIA, putting all your money in it right now because everybody is talking about it and it seems so hot. That's not a strategy. That's just you're gambling on it's going to keep going and I want to be in on it. You have to have a plan. So just wanted to add that. Anyways,
the longer you wait, the less patient you have to be.
That's exactly right. So again, guys, thanks to everybody who hung out with us. Frank, I'm going to let you go. Thanks for jumping on and sharing your 2 cents on this morning's NFP numbers and talking stocks here for a little bit. And we'll see you back on the next one.
Sounds good. Thanks.
All right, man. See ya. Okay, guys. And yeah, official last call here on the flash sale that we're doing for the 25% off of the EDGEFINDER. If you have not already taken advantage, we've got the link being dropped in the chat for you right now. If you have not picked up a copy of the EDGEFINDER, again, click this link. It will take you to a place where you can speak directly to someone on our team. So let me just show you what happens when you do that, just so you know. So when you click that link that's just been dropped, click chat now and just click the EDGEFINDER 25% off flash sale. And someone from our team, a real person, will be chatting with you directly to get you a copy of the EDGEFINDER, get access to all of our software tools, the commitment of traders data, the economic data reports, GDP numbers, PMI, retail sales, our top setups algorithm, which shows you setups and ideas that, we're watching currently in the financial market. These are all generated by our tools. So if you don't have a copy and you've been thinking about getting a copy, today is your chance to get 25% off before the sale ends. So there you go. Thank you guys very much for tuning in to today's video live stream. And with that, on the next one, have a great week, guys.
Thanks for tuning in to today's A1 Trading Show. Make sure to subscribe and to turn on post notifications so you don't miss the next one. Also, we're looking for more guests to come on the show. If you're comfortable being on camera, have trading experience, and you're looking to grow your audience exposure, we'd love to have you on. In the live stream chat and description below, we'll drop a link to apply to be a live stream guest and join in on the conversation. We hope to have you on soon. That's all for today. Trade safe, and we'll see you next time.